Losing money in Forex trading can be a frustrating experience, especially when you're putting in the effort to learn and improve. There are several reasons why this might be happening, and understanding them can help you turn things around. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. First and foremost, a lack of knowledge and education can be a major hurdle. Forex trading isn't just about guessing which way the market will move. It requires a deep understanding of market dynamics, trading strategies, and technical analysis. Continuous education through books, courses, and practice is essential. Another critical aspect is risk management. Without a solid risk management strategy, you might find yourself facing significant losses. It's important to use stop-loss orders, risk only a small percentage of your trading capital on each trade, and diversify your trades to spread the risk. Emotional trading is another common pitfall. Letting emotions like fear and greed dictate your decisions can lead to poor outcomes. It's crucial to stick to your trading plan and strategies, making decisions based on logic rather than impulse. Overtrading can also be detrimental, leading to higher transaction costs and increased risk. Focusing on quality trades rather than quantity can help you manage this issue. Having a well-thought-out trading plan is vital. Your plan should outline your strategies, risk management rules, and goals. Consistently following your plan and adjusting it based on performance reviews can significantly improve your results. It's also important not to ignore market conditions. Different market environments require different strategies, so understanding the current market context and adapting your approach accordingly is key. While technical indicators are useful tools, relying solely on them can be limiting. Incorporating fundamental analysis and considering market sentiment can provide a more comprehensive view of the market. Keeping a detailed trading journal can also be incredibly beneficial. By recording all your trades, including the reasons for entering and exiting, you can identify patterns in your trading behavior and areas for improvement. Over-leveraging is another common mistake. Using too much leverage can amplify your losses, so it's crucial to use it wisely. Finally, having realistic expectations is essential. Setting achievable goals and being patient can help you avoid the trap of chasing unrealistic profits, which often leads to disappointment and poor decision-making. Improving your Forex trading skills takes time and dedication, but by addressing these factors and making the necessary adjustments, you can enhance your trading performance. Remember, it's a journey of continuous learning and improvement. If you need specific strategies or further guidance, don't hesitate to seek advice. See the links below.